Welcome back everyone to the Audacious Witch channel where we talk about the magic behind the stock market. I am building a portfolio called Project AMW based on Warren Buffett, the world's best investor. His portfolio is built like a tank. It has less downside than S&P 500 in a crash, but it has more upside during the bull market. I measured it, BRK versus SPY since 2020. BRK wins on the percentage gain of 193% over S&P 500's 174%. Do you know Coca-Cola is 10% in Warren Buffett's portfolio? Today I will talk about Coca-Cola and Pepsi. One of them I just bought because there are over 15 people hit the like button on my Celsius stock video. I promised you a Pepsi video, so here it is. By the way, thank you to all of my subscribers and thank you for liking my video. It means so much to me.
Why should you focus on defensive stocks in this market? Because we're in 2025. This market sure has a lot of risk right now. We have tariffs, DeepSeek, inflation, Fed policy, bond yield, earnings, valuation, and debt refinancing. All this combined to be a dangerous cocktail for stock investors if you're not careful.
When you position defensively, like owning stocks like Northrop Grumman, Lockheed Martin, Pepsi, or Coke, you don't need to worry as much about what the market will do. If the market crashes, those stocks will protect you when you buy them at a fair value, which presents a margin of safety principle in stock investing. So, without further ado, let's jump right into it. Currently, Pepsi Corporation is growing faster and has a lower valuation than Coca-Cola. It also has materially lower risk, making them much safer bet than Coca-Cola. In this video, I'm going to lay out all the details you need to know before making an investing decision.
Coca-Cola and Pepsi are over 120 years old and have a strong history of rivalry between them. Both are known for their flagship brands, but they also have strong presence and own other strong brands, enhancing their moat further. Coca-Cola owns many iconic brands such as Sprite, Fanta, and Minute Maid. Pepsi owns brands such as Gatorade, Lay's, Rockstar, Celsius, and more.
All these brands have strong recognition worldwide and take advantage of their strong distribution network to sell products and push new products in the market. This allows them to acquire small brands and grow with the help of distribution. Which one has higher growth potential? Let's compare. Coca-Cola, the company, has had zero revenue growth over the last 10 years, but this is primarily due to the spin-offs. The organic revenue growth of the business has been around 6% per year over the last 5 years. The global beverage market is expected to grow around 5% per year for the next 7 to 8 years.
Coca-Cola is already a dominant player, and it is hard to expect it will increase its market share further. This means that we can expect Coca-Cola to increase its revenue in line with the analyst estimates of 4% per year.
Pepsi Corporation, the company, has historically grown revenue over the last 10 years at 3% per year. But this growth has accelerated over the last 5 to 7% per year. The reason for the acceleration of revenue growth is inflation. Analysts currently expect future revenue growth to be around 3%, but given how the snack market is expected to grow at 6% per year and the beverage market at 5%, it is unlikely that the combined growth of both segments is going to be lower. I'm not buying Pepsi for the revenue growth. I buy it for the safety and the dividends.
Now, which one is the ultimate value play in 2025? For the valuation analysis, I'm going to use a conservative growth rate of 5% per year before I tell you about their value. I would like to compare their operation and products of both companies.
Diversification is an edge for Pepsi. Coca-Cola primarily plays in the beverage market, but Pepsi plays equally from beverages and snacks. These separate revenue sources should help the company in case one segment is doing poorly and protect investors in that scenario. This diversification also helps during a recession, as it allows the company to reinvest its earnings in the industry will bounce back better from the recession. This will help increase growth and ultimately shareholder returns. What about the race to innovate?
Who is better at innovation? Coca-Cola has been active and is consistently trying to innovate by launching new products and discontinue the ones that don't work. Unfortunately, it has missed out on two of the most important beverage trends over the last decade and is trying to play catch up. These segments are electrolytes and energy drinks.
Pepsi holds a strong lead in both segments. In the electrolyte segment, Coca-Cola acquired Powerade and Body Armor to compete with Pepsi, with Powerade holding an 11% market share and Body Armor holding a 12% market share. This electrolyte segment is forecasted to grow at 8% per year and is a relatively fast-growing segment. Powerade was the first electrolyte company to introduce zero-sugar options, proving their drive to innovate and keep trying new things to gain market shares. Coca-Cola has also tried to gain exposure to the energy drink segment by purchasing a 16.7% stake in Monster Energy in 2014. Monster is the second largest energy drink company worldwide after Red Bull and has incredible branding power.
PepsiCo has beat Coca-Cola and has successfully captured the electrolyte segment. It acquired Gatorade back in 2001 and has proven to be a very successful acquisition, as Gatorade has 68% market share in the electrolyte segment. Gatorade is one of the strongest brand value in this segment, which gives them much greater pricing power than Coca-Cola's offering, allowing them to command greater control over pricing during inflation.
Pepsi also acquired Rockstar Energy in 2020, which was the third largest energy drink in the US, only after Red Bull and Monster. By fiscal Q3 2023, Celsius was the third largest energy drink brand in the US, holding 8.6% of the entire market shares. Pepsi Corporation stepped onto the scene in August 2022, becoming the primary owner of Celsius Holdings and taking up one of the largest company shares with a $550 million investment. Pepsi Corporation has since become the drink's official domestic and global distribution partner, facilitating its swift expansion. The global energy drinks market size was valued at $86.35 billion in 2021 and is expected to expand at a compound annual growth rate of 8.3% from 2022 to 2030. Pepsi plans to use its distribution network to promote Rockstar and Celsius, hopefully increase their market shares. This edge of owning Gatorade is in one of the fastest expanding segments in the beverage market, could massively benefit from increasing the health consciousness of the people.
Let's do that valuation comparison now. For Coca-Cola, I got a fair value of $53, which means the stock is overvalued by 15%. Pepsi, I got a fair value of $146, which is close to the price of Pepsi trading right now at $150. But Coca-Cola is overvalued and Pepsi has more upside potential with much lower risk of going down.
This makes Pepsi a better investment today. This should benefit investors as it lowers the risk of investors by offering a better margin of safety. For the protocol of the actual valuation calculation, it's all included in Audacious Investing Club. I will teach you everything you need to know. The link is down below. What about the defensive edge? Both companies are currently operating in the consumer defensive sector, which is largely a recession-proof area and hence a great addition to my AMW portfolio as it reduces volatility and gives you an option to rotate into high beta tech stocks after the market crashes. These companies are also resistant to high inflation due to strong branding power, and it lets them maintain margins during periods of high inflation, making sure they deliver strong growth to investors.
Given the cheap valuation, Pepsi would be a great fit for anyone looking to add exposure to stable, iconic business with great dividend yield and recession-proof their portfolio. I think Pepsi is much lower risk bet with a greater expected return compared to Coca-Cola because it doesn't have a Buffett premium attached to it.
The second stock I am buying is Celsius stock. If you want to learn more on Celsius, check out this video. The third stock I'm buying is Lockheed Martin stock. It's traded as much lower PE ratio than the market. It pays a nice dividend and it sells F-35 fighter jets. Defense through strength. How cool is that? I could make a video on it if I can get over 20 likes on this video. If you watched it till here is a bonus stock. Still doing my research on this one. The most healthy and clean energy drink company ever, called Guru Organic Energy. Based in Montreal, it's a micro cap, only 55 mil. They have 20 mil in cash, no debt. So a 30 mil company that did sales over 30 mil last year. You do the math.
And in investing, I'm in a no-called strike business, which is the best business you can be in. I can look at 1,000 different companies, and I don't have to be right on every one of them or even 50 of them. So I can pick the ball I want to hit. And the trick in investing is just to sit there and watch pitch after pitch go by and wait for the one right in your sweet spot. And if people are yelling, swing you bum, ignore them. There's a temptation for people to act far too frequently in stocks simply because they're so liquid. Defining what your game is, where you're going to have an edge, is enormously important.